Thanks, Graham. Thank you for the opportunity to come and speak to you all. I know a good many of you, and for those I don't, I'm Joe Kaderavek, the CEO of Cobalt Blue, and to all of you, g'day. Let me start, if I can see that, by introducing cobalt to you. I know it's a metal we often discuss, but what does it actually do? Cobalt's a very fancy metal glue. It's a glue. It keeps alloys together, traditionally used in metallurgy for gas turbines, airframes, etc. That's where I first came across it. And then more recently, it keeps cathodes together. It's the cathode within the electrode that does all the heavy lifting in a lithium-ion battery. So effectively what we do is we mine, we extract and we refine a very fancy metallurgical glue, and the future for that glue is very promising, even though, as Graham mentioned, it's being thrifted. The unit growth more than makes up for the lower penetration per unit of the cathode. Let me introduce you to Cobalt Blue. We've been around on the market since 2017. We've taken the Thakkaringa cobalt deposit to the market, and we've gone through multiple stage gates: scoping study, PFS, a refined PFS, and shortly we intend to produce a bankable feasibility study for both our Broken Hill project and our Kwinana cobalt refinery. On the screen there you see three building blocks. The Broken Hill project has always been our core and will remain so, and it represents a singular flow sheet. So the same cobalt that's extracted and mined and ultimately core processed at Broken Hill will then be railed to Kwinana and made into a precursor-ready cobalt sulfate product. So to explain the three building blocks, Broken Hill is the extraction. There's a slide, and I'll talk to you about Broken Hill shortly. Kwinana is a refinery with its stage one being third-party product. Kwinana will be first to market ahead of Broken Hill, and Kwinana will be in operation in back end of 2025. So it's quite quick. And our stage one of that will be 3,000 tonnes equivalent of third-party product. What we want to do is unashamedly service the US and EU markets under this allied nation framework. The US call it the IRA, the Europeans call it the CRMA, but effectively we are a new boy on the block with a high ESG, high compliance product, and it'll make a difference, and I'll explain why it will make a difference shortly. And stage two of Kwinana will then be fed with our own product at Broken Hill, and stage three will be our cobalt in waste streams products. On the right-hand side of the chart, you'll see CWSP. What does that mean? It means we're using our intellectual property to extract cobalt in pyrite and sulfide tailings globally. We've recently signed a test work arrangement with Hudbay Minerals to extract cobalt, copper and zinc from their Flin Flon mine tailings, 100 million tonnes of tailings, and it has the advantage of not only extracting the metals, but the huge advantage for that mining company of compressing what is a $300 million rehabilitation liability. So from there, from Hudbay, it's all about servicing the community, reducing that legacy, employing people beyond the economic life of the mine, and creating a win-win. Not to mention the fact that we'll be using Manitoba hydropower. So it's a wonderful circular metal argument. In terms of getting onto Broken Hill itself, some of you have been there. You all know the town. If you don't, you shouldn't be in the room. We are located about 20k west of Broken Hill, just halfway to the border. What makes the project work is the basics. If you look at a mining operation today, you break down all the logistics, pros and cons, and it's those cost lines that dominate the success of a mine. We're located close to a town. It has 17,000 people. It has the social infrastructure to house 25 to 30,000. It's a broken town in the sense it's on a decline from its mining trajectory. We aim to arrest that. We've got a road, a main highway passing through the top or near the top of the tenement. We've got a railway line, the east-west Sydney-Perth line passing through the tenement. We've got guaranteed raw water supply from the town. And most importantly, given that we are reagent light, energy heavy processing, we've done that for commercial reasons, because we have a 220 kV substation 20 k away. We are going to power this project using wholesale power from the NEM, and it works very, very well. So those are the key cost and logistics issues. We recently, or 2 years ago, were awarded major project status by the Commonwealth, which is a recognition of the project as well as its criticality to the national interest. And in terms of broad outline, it's 3,500 tonnes of metal equivalent, which we'll make as a cobalt sulfate via Kwinana. It'll be a battery-ready sulfate, so we'll be selling that straight into precursors. It's long life. You'll see an FS from us shortly, but broadly 17, 18, 19 years of life. And there's no shortage of cobalt in pyrite in the district. This will become a district refinery in its day. And broadly, in terms of its economics, about 85% of its revenue line will be cobalt. That's an absolute exception to the otherwise cobalt rule of being a byproduct. There is no metallic byproduct. Obviously good and bad from economics point of view, but really interesting from a battery industry view, because if you invest in this mine, you're investing in cobalt. You're not getting a mine that comes in and out of production based on a copper or nickel price. And that's really important for battery off-takers going forward. And broadly speaking, there's enough metal produced per annum to service about 500,000 EVs. So it gives you an idea of the scale of Broken Hill. I'm going to talk about Kwinana in a little bit of detail. Stage 1 I mentioned is third party, about 3,000 tonne of cobalt equivalent. We're looking to source domestic product. There is, believe it or not, in Australia, we have hundreds and thousands of tonnes of cobalt produced typically as an intermediate and sold at pennies in the dollar. We're looking for overseas product, but we are unashamedly targeting that IRA market. What we want to do is be clean vehicle credit compliant. I'll talk about that in a moment. But effectively, it means that our customers can sell that EV into the US, and in return, those vehicles will be awarded a tax credit in the order of $3,750 for its critical material content. Kwinana will be in production late 25. We've got a Japanese partner already identified as a trading house. They are one of the largest trading houses of cobalt into Japan, and they have an existing footprint in Kwinana. It's a footprint that's only 3 k away from Nickel West, 8 k away from the proposed IGO Wailu PCAM facility. It's downtown. And that 3,000 tonne of metal will be a useful add-on, potentially for collaboration later on. So it'll be a brownfield. We have a partner that's a very, very willing partner in terms of a landlord and an off-taker, and we also therefore have access to Japanese investment money. And the Japanese, despite what you think of our government's stance, the Japanese are very proactive in this space. They've understood resource scarcity for decades and decades, and they're well ahead of the game to fund these sort of outcomes. Broken Hill 26, 27, as I mentioned, and then waste streams beyond that point. This is the chart that shows scarcity or in terms of refining. The left-hand chart is a screamingly obvious geography, which typically I reserve for foreign clients, and the right hand is really shows you the dire straits of the cobalt processing industry. Whilst the DRC produce 70-odd% of cobalt metal units globally per annum, the Chinese control 75 to 80% of that market. So even if you can take it out of the DRC, you can't get your hands on it because it's going effectively into a Chinese refiner. You see there a pecking order of key cobalt sulfate refining in the world. What makes this interesting is that we will be somewhere between 3, stage 1, and 7.5, stage 2 of metal units into that market. It makes us a very big deal in an industry that's scant for Western world footprint. What's even scarier than that is if you take us out of the loop, you take Electra out, Electra's third from the bottom, both of our projects are yet to be, you'll actually see what actually is in the current market, and that's Coca-Cola. That's the only Western world refinery for cobalt currently in operation. And it shows the key point that for 30 years, the West has not invested in this space. And this is about to change. I'm going to spend a little bit of time on this chart, and I love charts, I'm an engineer, but this is in my mind, the singular thing I want you to take away concerning the opportunity that we're targeting. This chart has two Y axes. The one on the right is just compliance to the IRA, just percentage of the minerals that have are IRA compliant. The dotted line pertains to the right hand, and it shows that legally the compliance is going up, and it's going to hit a target at 80%. So every year from here, it will get harder and harder to source clean vehicle credits for the IRA. This year, at 40%, it's quite low. In other words, 40% of the critical minerals are sourced from an FTA country. All the other data refers to the left-hand slide. The blue columns are allied nations, so nations which currently have FTA or are allied with the US, currently well under 10,000 tonne of metal. It's a 200,000 tonne market. That'll grow. I've added the light blue, which is Indonesia, because there is speculation that Indonesia will be included as an FTA country. If it is or isn't, that's not for us to decide. The green line represents the demand that's commensurate with IRA targets for cobalt, relative to the, if you like, the two blues added, if you include Indonesia, supply. We are in a lull period today. We'll be possibly in one next year where there will be sufficient supply. Beyond that, there isn't. Now, we've done a number of analyses on this where we flexed down demand enough so that the US only achieve half of their targets, a quarter of their targets. But if you take 20 to 25% off those targets, chop it down, you're still going to get a transition point around 27 in terms of physically not enough material. I'm not here to tell you that, look, my chart says this thing's is going off the wall. We all know commodities never go into actual deficits. That's a fallacy. But you will see some change, and I'm clearly pointing to a tighter market coming ahead of us, not the very loose and poorly priced market we see today. I just want to conclude with a number of slides showing the hard work, and I thank you, Graham, for your words of what we've done. This has been a 7-year journey, and our journey in the last 3 years has included a very large-scale demonstration facility at Broken Hill. It includes an underground portal where we mined 5,000 tonne of ore, and we've made about 600 tonne or so of concentrate from that, and you can see the portal and the con circuit there. And then that's been put through calcine and leach operations. We recently logged 1,500 hours with our kiln and about 1,200 hours of our leach circuit. It's a serious operation. 35 full-time staff running 24/7. This is not a pilot plant you can fit in the back of a ute. This is a serious quasi-commercial stance. For those interested in what the product looks like, done by colours, there it is, the MHP, which is a cobalt-rich 30% cobalt, 5-6% nickel product. The sulfates on the right, that's what the battery makers want, and that's the high purity product, and then the elemental sulphur in that. And it's the elemental sulphur that's the key to our waste streams business as well. Extract sulphur from a sulphide waste dump, you are materially lowering the acid potential of that waste dump. Watch this space. This is a very, very big deal for our company in the circular metal economy going forward. I'll just land on the last slide about what's coming up. What can you expect? We've got DFS studies to be published shortly. The Kwinana DFS will be separate to the BHC or the Broken Hill DFS, both due imminently. We're also running a refinery development program. What does that mean? We're upscaling to about a 1 to 50 scale continuous process to look at other third-party sources for Kwinana. We're running that now. So we are looking at an Aussie product, we're looking at DRC product, and we're hoping to source either Philippines or Indonesian product going forward. We want to be truly agnostic to the feedstock. As long as it's IRA compliant, we want to be able to create this alchemy of turning non-FTA into IRA compliant feedstock. That represents a tremendous arbitrage, particularly in a business that's not capital intensive. Refining is not a capital intensive business as long as you've got the risk mitigation on the feedstock. You can see then the timelines step out, but put simply, we hope to be in construction with Kwinana in second half of next year. Our Japanese partner has signed an MOU with us, a cooperation MOU. We hope to turn that into a binding arrangement with the FS. Again, I mentioned earlier, we hope to bring some Japanese capital into that. The fact that it's a brownfield drop-in is obviously very helpful in timing, but 1 year construction means a second half 25 first product. Broken Hill will take the better part of next year for FID because they are much larger chunks of capital, including debt, and then they do take their time. And we're looking to start that construction process in the early 25 or so, with approximately a 2.5 year build is the indication to date. That hopefully shows you what the next 24 months or so looks like. With that, I'm done, and I thank you very much for your time.